Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello and welcome to ETMarkets CryptoConclave. I'm Iloni Bhatt. The crypto space is new. It's filled with technical jargon, fast-paced innovation, and a major fear of missing out. Many of us may want to invest, but we quite don't know enough about crypto, which leaves us vulnerable to scams. It's estimated that in the year 2021, about $3.2 billion in cryptocurrency was stolen by scammers. So spotting red flags when it comes to dealing with crypto assets is critical. And to help us understand this, we have with us Rohit Goyal, who's the founder at Mesh Finance. Mesh is a community-driven DeFi ecosystem. He's also founded Mudrex, which is a crypto trading platform. Rohit, welcome. Andre Cronje and his longtime collaborator, Antonel, they called it quits. They're saying, we're closing the chapter on DeFi. Dozens of tokens have been hit following the news. No one could have predicted this, and we are talking about red flags in crypto assets. How do investors deal with something?
So, okay, let's first talk about the specifics of this event. So Andre has been a builder long before anyone has been a builder in this space, right? So as a result, he has become an influencer because he has earned a reputation. So if you will think people who have invested in projects where Andre was associated, there will be a waterfall. There will be people who are at the front of that, at the edge of it, who knows how things are happening, how operations are happening. Then there will be a long tail of investors who might have just invested because of the popularity, or because they see, oh, hey, this coin is increased in price, or this is like top 10 coins. So for the long tail investors, they do not have access to this information because they do not spend time on what is happening in the organization itself. As a result, we have seen a shock, the price shock when this news comes. You can consider this shock similar to let's say today, the CEO of Flipkart says, hey, I'm going to resign. So definitely stock will tumble in that period, right? So it's a similar kind of a shock. But people who are into the things, who know how things are happening, most likely none of them would have sold. That includes me, personally. In fact, the moment I saw that news, how I saw that news is that this is exactly how the long tail of investors are going to react. They are going to react emotionally. But I know that Yearn Finance, for an example, which is a protocol which Andre founded, it does not depend on Andre. It's a decentralized autonomous organization. And that's the part we were discussing about. Here, we do not depend on one person. So I knew this shock is short term, it will bounce back. So I should buy it. That's the opportunity for me. And it acted in the similar way. It went down, Yearn token went down for, let's say, 24 hours or something like that, but it bounced back very strongly. So you can consider them as shocks. And these are similar to any new shocks which we see in stock market as well. Best way to avoid this is stay on top of the things. Whenever you invest in the fundamentals. In Web3, you are not just investing in one person. You are investing in a community. You are investing in a product. You are investing in a protocol. So community didn't change because one person left. Protocol didn't change because one person left. Product didn't change because one person left. In fact, what it did is it proved that even though the founder left, things are going very smoothly. So it could be a time to in fact sense check, hey, this thing is real, it can run without a founder.
Do you see it, when the person with the vision and the mission kind of steps away? Do you see it then slowly crumbling down as you would perhaps see in a real world scenario otherwise?
Yeah, so I will say in communities, it matters less. Obviously, it also depends on the kind of community you have created. If you have created a community just from the perspective, hey, like join this community and you will get rich, then obviously it is going to impact, because there is no fundamental in that community. There is no ethos in that community. Why that community unites, there is no reason to that. In case of a good community, like a community aligns because of the values, because of some mission. So just because one person goes away, that mission doesn't change, that values doesn't change. And over the time, such communities are built and more people join into these communities. So there have been like more leaders within the Yearn Finance team who are still working, for an example, for the same community. And it will not stop there. We will see more leaders getting created. And that is why we call it bottom up. Like, it's not like you are hiring someone. It's like someone is earning their reputation because they are playing for the fair.
All right. Okay. Moving on, with greater adoption of crypto as currencies, we are seeing a proportional increase in theft, scam, fraud. And as crypto adoption spurs, do you see an increase in this sort of activity?
So, okay, so first, let's categorize what kind of thefts or scams are there. So I think primarily there are two kinds of scams or thefts in cryptocurrencies today. One I categorize as scams, pure scams, in which a malicious actor, a malicious person is trying to create a fake project. They do insane level of marketing and try to gather investors' money on false promises, and then suddenly they just go away. So those are like clear scams. There was no good product, there was no team as such, like legit team, there was no mission as such. The whole idea was to scam people's money. Then the second kind of thefts are the technical hacks. So there might be like technical or economic bugs in the smart contracts, because all these are finally driven by a smart contract. So it's basically, you can leave a bug in a code, right? Nobody leaves a bug in a code intentionally. Like it just can be an outcome. So which other hackers might exploit and steal funds. How to avoid both of these is very simple. For scams, if you are investing with the promise that, okay, I am going to make 10x money into this, you should probably assume like there is no easy way of making money. Like you will get scammed, because like you are investing in that perspective that I'll make 10x. So you didn't ask how much I can lose. Can I lose all of it as well? Like what is the chances of losing it? So you basically discount the negatives of that. You only like give the aggregation to the positives. So never invest in teams who do not have credibility. So research about the team. Never invest in marketing. Like try to look for the product first. If a project is just marketing about the token, then probably they are not a good deal. A project should talk about the product, not the tokens. Like Flipkart doesn't sell Flipkart equity, like they sell about their product, right? That's what a blockchain project also should do. In case of technical hacks, so technical hacks no one can avoid. The way to think about them is like you are investing something really early. So whenever you are investing, think like it will go to zero. And there is a low chances that it will come into like multiples, because this has not been battle tested yet. The more time the code is live, it is battle tested like around multiple conditions, more confidence you get. So with that perspective, like most people should invest in Bitcoin or Ethereum who have been into space for a long period of time. Then probably they should invest in the protocols who are at the high level, like Uniswap for an example, Polygon for an example. Then they should probably invest into tokens which are just launched a year back, and similarly.
Is that how a user weighs legitimacy of a project and then place trust? Because I believe trust then, from everything that you say, is at the core of it.
Yeah. So like, again, like it kind of comes down to the question, like you can draw a parallel to venture capital investing when you are investing in early stage tokens. So when you invest in a venture capitalist, what a venture capitalist do? They research about the team. They do reference check about the team. Hey, do you know this person? Like, how is he as a person? You do a due diligence on the data they have, which is like, what is the business metrics? How many users are there? and then they see the potential future value, like how big should this become if given everything is right. So similar concepts, I think one can apply to evaluate early stage tokens.
But it's, not within the bandwidth of everyone to do that, especially if you just want to be an investor and really don't know too much about the ecosystem. That's a challenge, isn't it?
Yeah, and as a result, like not everyone should do this. Like if you are not ready to invest time into research, then probably you should invest in the projects who have already battle tested themselves. So most people should just like invest most of the capital in Bitcoin or Ethereum, or based on like top 10 cryptocurrencies, for an example. In fact, that's what we also help people with Mudrex, right? We create baskets of cryptocurrencies. So even in that, we keep these things in mind, that people are not investing their large portion of capital in, let's say, the bottom 10% of the tokens. They are investing their 90% of the capital in the top 10% of the tokens, and then like just spreading a little bit on the early stage tokens, which might give huge returns, but they might also go down zero. But in that case, you are only losing 10% of the capital. You are not losing 100% of your capital.
The most common way, as you said, people invest in cryptocurrency is through exchanges and third-party applications. How do investors know this is the exchange or protocol of trust?
Yeah, so you can say like, so first of all, there are two types of exchanges. I assume this is in context of centralized exchanges, which is what most people use. So people should go for the ones who have been into existence for quite a period of time, who have been backed by credible partners. For an example, like in case of Mudrex, and it's just an example, Mudrex has been backed by Y Combinator or Nexus Venture Partners or Nawal Ravikant. So these folks have done that due diligence on which you can back on. Like, okay, this is a credible project. Many people have staked their capital on it, so I can use these kind of exchange or platforms. So anyone who have raised capital like from good investors, good credible partners who have been into existence for a decent period of time.
Rohit, this is among my last questions. How do you see regulation change the user demand for crypto assets?
Interesting. So I guess like in generally, so how regulations can stop crypto demand. So I'll assume by default that there is a lot of demand for crypto assets in general, especially from the younger generation. How you can disincentivize them is like by bringing absurd laws, like high taxation, for an example. Consider them this, like if you are going to consider this, that this is going to become economy, and if you try to create a taxation from that perspective, I think that will go a long way compared to if you just try to put the old taxation systems in this new way. Like if you are trying to compare equities with tokens, probably that's not the right way to do it. What will happen, what that will lead to if you do it in the wrong way, that people will move. Like I know many folks who have moved outside of India, like they have become an NRI now. So they are doing everything legally. It's just that they do not want to pay taxes in India because it's high tax rates. So taxes should be balanced. It should be easier to also like submit taxes. So like the first version we have heard from government, it's complicated to understand. I am sure there will be more clarification on that. But if I have to actually hire an accountant to even submit my taxes, then it is going to stop me. As a result, I will be more motivated to avoid submitting taxes and do everything in a more shady way than like in a more credible way.
All right. Rohit Goyal, thank you so very much, for your time and for your thoughts today. Obviously, there are red flags that investors must be made aware of. And as you say, people like you are trying to do their bit in it. But I think in this space, at the end of the day, the responsibility is with the individual.
Exactly.
Yeah.
It's bottom up, it's community. Like as a community, we should decide like what kind of a future do we want. We definitely do not want to like sponsor frauds. We do not want to sponsor wars. We do not want to sponsor drugs. As a result, like we as a community will come up with solutions. I think like it is not going to be the other way around where it is going to be probably solved with regulation, but probably will create new systems in which you can bring out bad actors out of the systems.
And as long as it's a system which is equal and in which everyone can participate and at a level playing field, then definitely, it's will be a dream come true. It will be a system that will benefit rather than, put barriers in place when it comes to entry and participation.
Exactly.
With that, Rohit, thanks so much for your time and for your thoughts today.
Thanks for having me, Miloni.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.